What's up, everybody? All right, so welcome to Chat with Jat, episode 6. Today is about Palantir and the earnings results. Well, not the earnings results. I just put a business update with a earnings update, I guess, because the report's not out yet. But it came out for Q2 2022 today morning. I waited, hopefully, to see if the financials come out. But the financials did not come out. So what we're going to do right now is we're going to look at how the market feels about the results. And the market don't like it. The market don't like it at all. So if we look at my screen right here, we see that the stock is down 13%. 13%. That's not good. So it's down 13%. I have no idea why. And I was not awake this morning to look at the call, hear the comments, look at the YouTube content creators, the amazing YouTube content creators. But I'm going to break it down. I'm going to try to be as efficient as I can. And I'm going to let you know why I think the stock is 13% down. And let's take it from there. So I want to make this a 15-minute call, or not. I'm saying call because I'm having calls all day from a new consulting gig, but I wanna do this in like 15 minutes. So I'm gonna put a 10-minute reminder, and we're gonna try to box this in 10 minutes. Okay, 10 minutes. I'm gonna box this. I'm gonna try to explain it quickly, what happened to Palantir, why I think it's down, and what it means for the investors like you and myself and people on the sidelines. So let's see what's up. Okay, so I'm gonna make myself a bit smaller here. So I got my small face right here up in the corner. Hello. So okay, let's jump straight to earnings. So look, nothing's out. Earnings release, presentation, webcast, letter from Alex Karp. Let's go straight to earnings release. I got the earnings from Q2 2022 and the Q1 2022, so 2 periods. I also have the presentation open. And I also have the Q1 presentation open and the year-end presentation open. All right, so we're gonna make this quick. We're gonna run through the numbers. We'll run through it, so pay attention, because I know nobody has fucking 45 minutes to listen to me all day talk about this stuff. So key facts that stood out to me right away. Okay. On the US side, things are going good. Commercial revenue grew 120%. I mean, when you go from 1 to 2, it's 100%. So, I mean, it doesn't say much. US government grew 27%. US revenue grew 45% to 290. Revenue grew 26% year over year to 473. If we compare it to prior period, revenue grew 31% year over year to 446. The numbers are a bit bigger though, 446 to 473. It's about a 6% growth quarter over quarter. How do I know? Because I'm a genius? No, because I crunched the numbers. Now, what else do I like to highlight here? Cash flow from ops, 62 million in Q2 2022. Q1, it was 35. So 35 plus 62, 97 million. Almost 100 mil. But in 2021, the full 12 months of 2021, they earned about 330 million in operating cash flow. So right now we're at the half year mark. We only hit 100 million cash flow. So we're about 33% of the way of cash flow generation when we're halfway in the year. So we have half the year left. And are we going to catch up to what we did last year? Last year was 333 million. And now we're only at a 97 and half the year is done. So this is a bit of a concern for me. But if you step back, you remember Palantir's business model is project based. It's not really, or not largely, recurring revenue from key customers with recurring licensing fees. Sometimes it's special projects that have big billables and those projects finish at a certain time. And then that's it, that's all. So that could impact cash flow. So let's see. I mean, I'm curious to see how the last 6 months of the year is going to go and if they're going to be able to beat the 330 million cash flow that we saw here. Where is it? Cash flow, Yahoo Finance. So you see your 338. So this is something that I am curious to see. For some reason, this doesn't sit right with me. Like, was it really 338? Let me just check quickly, because I don't want to waste everybody's time talking nonsense. But if I pull out the annual report, let's go put it right here, and we go to cash flow. Where the cash flow at? It's gonna show up somewhere. Yo, so much writing, huh? Maybe I should have done. Okay, there we go. Yeah, I was. Okay, Google's not stupid. I mean, Yahoo's not stupid. It's just me. Okay, so that's what we see. Okay, so 97 million, and half the year is done, but last year they pulled in 330 in the full 12 months. So that's kind of a bit scary. Now, if we look at the trailing 12 months, they wanted to stress that U.S. revenue hit 1 billion. Trailing 12 just means the last 12 months from June. So June 2021 or July 1st, 2021 to June 30th, 2022. So they're saying the last 12 months, US pulled in 1 billion revenues, which is pretty cool. Pretty cool. So that's fine. Cash flow from operations was 292, which is okay, whatever. And then they said here, revenue 26% year-over-year growth, 6% quarter-over-quarter in 2022. I just want to touch on that a little bit, because I feel like some people might be a bit alarmed. 6% quarter-over-quarter, but don't forget, Palantir's business model is very unique. They do a little bit of, they do a little bit of dancing with their clients. I feel like I should make myself, my face a bit bigger here, so, because I see, I could fit right there. Yeah, nice. Okay, so Palantir, the way they work with clients or new clients is it's a dance. They don't just get a client, sign them up for maximum deal value, and then run with it. It's more of a, let me take you out, let me show you what I can do. I'll let you try my software for free, trial mode. You can see if you like it. If you feel comfortable, then we can expand a little bit and see what else you like. You can introduce me to your friends, your family, the marketing department, the procurement department, the operations department, finance, data analysis team, whatever. Introduce me to everybody, and then they all start to mess with Palantir. They like it, and then they all sign up for different modules, and then suddenly you're scaling. Now you're offering them more stuff. Oh, you needed help with that. Oh, I can definitely help you with that. I got something up my sleeve to help you with that. And that's what Palantir does. It's acquire, expand, and scale. So when you're following quarter to quarter sales growth, it's kind of hard to do. It's kind of hard to judge them. Like, oh my God, you guys only grew 6% quarter over quarter. Ideally, all shareholders want to see boom growth, like 10%, 15%, 20% quarter over quarter. But they don't. It's a B2B business, so they don't have an army of sales headcount that's penetrating one market one quarter, and then the next market the next quarter, and they're able to close and expand and scale. Acquire, expand, scale happens over months, quarters, maybe even years. It doesn't happen in weeks. So that's why measuring revenue growth year over year, I find, is more reflective of Palantir's business model, which is acquire, expand, and scale. It gives them time to mess around, to convince the client and the client's internal teams that, okay, Palantir's good. We can mess with them. Their modules actually work. It helps us. We could pay and spend some dollars and let these teams focus their energies on other areas. So that's why I wasn't too concerned about the 6% quarter over quarter growth. All right, so this is the big hitter, okay? For Q3 2022, we expect revenue between 474, 475, and adjusted income from 54 to 55. For full year 2022, we now expect 1.9 to 1.9. I don't even know why they say this. Just say 1.9 billion. I don't give a damn about $2 million, but 1.9 billion, and adjusted income from ops of 341. The revised guidance excludes any major US government awards. Now you know why the stock is down 13.3%. It is because of this revision. Why, you ask? Well, look, I do maintain that Palantir has always said annual growth of 30% or greater through 2025 per long-term guidance. This is what they said in Q1 2022. So literally months ago, they said 30% growth. But now they've gotten wind that it won't be annual growth of 30%. Now it's going to be 23%. How do I know? Well, I'm a fucking genius. That's why. No, go to quarterly, go to Q. Where was it? It was, where was it? What period are we in? We're in June. No, Q3. They said Q3. So they said September. So September was 392, right? So if you say, oh, give me 50%, 30% on 392, we should end up like somewhere around 500, if I'm not mistaken. So you say, you know, 392, I'm expecting 30% growth, 509. 509. So instead of finishing at 509, they're saying we're going to finish at 475. So they're about 30 mil short. And then when we look at the annual revenues, right, if we go annual, they pulled in 1.54. So if we say 1.541, I should have done that, but it's 2 billion. But now instead of pulling in 2 billion, they're saying 1.9. They're 100 million short. This is spooky. Spooky, scary. People want to know that they can trust management's guidance, right? So if management's telling you, literally 3 months ago, fam, don't worry, we're still doing 30%, we're growing 30%, everybody's happy, everybody's gonna get paid 30%, bang, 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 till 2025. Because a lot of modeling does that, right? Like if you say 1.541, okay, no, let's say 1.541, right? For oh my god, 10 minutes already up. God damn it. 1.541. Repeat. Okay. And then you say 1.3. People are expecting 2 billion in 2022. Then they're expecting 2.6 billion in 2023. Then they're expecting 3.4 billion in 2024. And then they're expecting 4.4 billion in 2025. So 4.4 billion in 2025. 4.4. Now, if you do suddenly 23%, which is what they're saying, then it's 1.89 in 2022, then 2.3 in 2023, then 2.9 in 2024, and then 3.5 in 2025. So it's 3.5 versus 4.4. It's a big difference, right? We're talking about $900 million difference. So that's an issue. I'm just double checking to make sure I didn't screw up. So 2022. No. 2022, 2023, 2024, 2025. Yeah, so 3.5 versus 4.4. So that impacts all kinds of modules, right? Like I have a module here that I used to run just for fun. I didn't update the metrics on shareholder stuff, but like let's say here, right? Like I say, where is it? I had a moderate case. Let me make my face smaller now. I had a moderate case here, and it was a 10-year case. And look, I baked in 30, 35, 30, 35, whatever. And based on all the share price, based on all the shares outstanding, I said, okay, well, the share is worth $19 over a 10-year horizon. And at the time, it was trading at 11. But let's say now it's 25, and I just drag 25 across, like forget it, you know? Suddenly the stock is worth $10 now. So it's not 19 anymore, it's 10. So that's why these have huge implications. Like we're saying, oh, the fair value going from 30% growth to 35, or an average of 34% over 10 years, to suddenly being 25, it makes an impact of the share being worth 19 versus share being 10. So that's why the market reacts the way it did. All right, you get me? So the big thing here though is the revised guide. Oh no, don't mess it up. They say the revised guidance excludes any major US government awards, and we believe this to be the base case. So they're being honest and forthright, saying, listen, this is the base case. We're not pulling your leg. Right now, it excludes any major deals that we've been working on the sidelines. And if any major deals come in, then this is obviously going to change. Bang, overnight. And we know this to happen a lot. Palantir signed a $100 million deal just the other day, right? With the US Army, if I'm not mistaken. So we need to be mindful of that. You see here, machine learning, blah, 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 $100 million and over 2 years. So 50 million a year. So they only need to sign like some kind of major deal and they're good. I don't know if I hit the screen when I did that. Did I? Yeah, you see? Okay, yeah, I didn't. Okay. So let me go back to this. God damn, I look so chunky. That's what I hate about having beards. You know, when you have a beard, you get comfortable. You're like, yeah, I look nice. You know, I'm not getting like a double chin, but now I feel like I'm getting a double chin. Maybe it's just, I don't know, the angle, I don't know. But anyways, let's make this small so I can continue on what we're doing. All right, so we did that. We ran through the guidance. So I'm pretty sure the reason why Palantir is down 13% is the revised guidance. And let's go into the other details, okay? Let's go into the business update. I got 5 minutes. I'm gonna run through this in 5 minutes. Let's go. Customer count overall 304. Up from 169 a year ago. This is huge. This is huge. Why? Because they had 25 headcounts, right? Look here. Not here. At the end of December 2020, they had 12 people working in sales, of which 6 had more than 9 months experience. The guys with more than 9 months experience are the ones who are ready to go meet the client and make those deals, you know, ink deals. And then in end of 2021, December 31st, they had 25 people over 2020 versus 6 over 2020. And they had 80 that were still in training, you know, or under 9 months, you know, they're still getting to learn the ropes, learn the product. So what this tells me is if they went from 6 to 25, that means 19. Let's make it a nice number, 20. Let's just say 20 people. Every quarter, they had 5 people join the force. You know, like join the crew, I guess. Let's say that. And now we can assume that they probably had a good chunk of people join in Q1 and Q2. And that's what's contributing to the customer increase of 304. So this is pretty incredible. Now our business generated more than 1 billion on a trailing 12 months. Okay, great. They post a lot of pictures. Palantir Healthcare seems like they have a specific modules for healthcare, specific teams dedicated to healthcare. They said that they went from 42 to 153 in 2 years. So that's a pretty sizable growth. The TAM, nothing new. Yeah, nothing new here. New products since public listing. Yeah, they talked about a few things there. Blah, 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 blah. Usage-based pricing. This is good for IT departments who want predictability. So, I mean, this is good. I mean, based on the number of IT licenses you're using or the modules, you want to be able to predict the prices that you're going to pay. It's very helpful. They're developing they're growing the developer community. So that's good. I heard about the YouTube content support. Obviously Palantir is not going to give me a shout out because, you know me, I'm not a software guy. I'm not an engineer. I'm a finance guy. I don't care about technical details. So skip that. So go to Q2 financials. This is where it's going to get interesting. 1 billion trailing 12 months. This is a big deal for them. So that's good. Total government revenue growth, 13% year over year commercial growth went from 144 to 210, 46%. That's good. So the sales headcount is going to work. Q2 revenue grew by 26%. So from 376 to 473. Very nice. Total customer count. This is where I like This is what I like, where I like what I'm seeing. From year-end 237 to 304. So in literally 6 months, they added almost 60 new clients. That's amazing. When you compare from last year, June 169, they almost doubled it. No, not doubled. I would say that's a far reach, but they almost added 130 clients, which is great news. Commercial customer account, they went from 79 to 203 year over year. Average revenue per top 20 customers, they're scaling 39 to 46. So that's good. They're growing their revenues. They're growing their offerings to customers. This idea of acquire, expand, scale. When you scale, you become invaluable to the customer because you're penetrating their business and offering them lots of value. And that's why you see the deal value grow. So that's good news. Es bueno. Es bueno. Deals closed 140 to 234. Billings 379, 396. That's cool. 3.5 billion in remaining deal value. Very nice. Adjusted gross margins. Kind of interesting. Is it cyclical? I'm not sure, but here they say Q2 the adjusted GM was 82, now it's 81. I know there's definitely pressures on gross margins because everybody's getting increases in salaries and wages because inflation is going crazy right now. So that's putting pressure on margins for sure when you're increasing prices or increasing wages, and you may not be able to increase prices because it's based on contracts. We are continuing to invest in our business. Okay, not a lot of meaning there. We ended the second quarter with 2.4 billion in cash. In July, they closed a 450 million delayed draw term loan for a total of undrawn credit facility of 950. So they have access to close to $1 billion in cash. So that's pretty good if they ever need something. Total US revenue growth 737 to 1 billion trailing 12 last year to this year. So this is huge news for them. US revenues are becoming important. $1 billion. That's what we need. 10 minutes is up. I'm going to renew it. How much time have I spent so far? I'm at 22 minutes. Okay, 22 minutes. Give me 10 more minutes and I'm done. Trailing 12 revenue, CAGR, the compound annual growth rate, 41% since 2019, 743 to 1.7 billion trailing 12. That is great. This is it. This I love. I appreciate their honesty. The fact that they just didn't wait till year end. The fact that they didn't just say, oh, fuck it, we're going to surprise everyone at the end and say, oh, yeah, we didn't make 2 billion. We just made 1.9. They just came out with it and it said 1.9. You got to respect management integrity. At the same time, you got to question management's ability to forecast. Were they expecting some major deals to come through and they didn't? Or did they lose an important customer? So now they're dropping to 1.9 instead of 2 billion. I don't know what happened. And I guess those details are going to be in the call when people ask their questions. So we're going to find out. But if I had to guess, this is the reason why, as I showed even in my evaluation modeling, that the stock is down 13%. Commercial customer account 79 to 203. This is super bullish for me. Super bullish. US commercial customer account 34 to 119. They tripled that in 1 year. Very, very nice. Looking very, very nice. And then customer reconciliation cash flow of operatings. So this is what's in the cash flow statement, 62. Add back cash payroll for stock-based comp. Take out cash use for PP&E. What the hell? Okay, 60. So it's still comparable, but I still like this. This is a good number. And then reconciliation gross profit to adjusted gross profit. So 370, the added back stock-based comp. As you can see, stock-based comp is kind of trending down with the stock that's going down. So there's that, 81%. So it's really just the margin itself is really going down, which is kind of a thing. And let's say adjusted gross margin is 81 to 81, so it's comparable. What else do we have here? Stock-based comp, wow, 232. Last year, now 146, so it definitely dropped. Adjusted operating income 116 to thing. Adjusted, it's really just the loss from operations. Like, I think that's what's driving, because if the stock-based comp adjustment, it's not as high as before, So this number is actually a bit too low. That's why it's 23% instead of 31. So there's a lot more costs now, right? They have 80 headcounts based on December 31st. And they said Palantir is not slowing down its hiring. They're just going up. They're increasing their hiring. So let's just see what else we can find. And see what we can do. See, gap, adjusted earnings 0.04, non-loss of 0.01. All right, let's jump into the actual so wait, what did I do? So we went through this, right? We went through the actual report is not out yet. So we went through earnings release, went through the presentation. I got 5 minutes to read the letter from Alex Karp. I am going to read it in an eloquent way to pay homage to the Alex Karp, the legend. So let's see what his thoughts are, what he has to say. Let's make my face a little bit bigger so it doesn't get, so you can still see me. I'm still here, guys. Okay, so August 8th, 2022. A new company is emerging within the one we have built. Our business in the United States alone generated $1 billion in revenue in the 12-month period ending with our second quarter this year, representing a 42% increase over the prior 12-month period. The strength and momentum we are seeing with our customers in the United States is a reflection of the refinement and maturation of our software platforms, which we believe will continue leading to increasingly broad adoption across sectors. We have found that commercial enterprises and government agencies in the United States have been the earliest adopters of new forms of technology. The willingness of American institutions to experiment with novel software platforms and to invest in the success and durability of their organizations over the long terms remains unparalleled. Of course, the US is home to the greatest tech companies the world has ever seen. Google, Microsoft, Meta, Snapchat. No, I'm just kidding. Fuck Snapchat. Palantir. A lot of great softwares, a lot of spin-offs, a lot of great things come out of America. So that's without a doubt. Our quarterly revenue numbers in the US market underscore the significant and unrelenting growth of our business in recent years. Let me see if I can zoom in a little bit here. Yeah, okay. I couldn't really zoom in. So here they're showing like, so a lot of growth. A broader shift, if not return to the United States, is also underway. Interesting, given that they've hired a lot of people in Europe. What does he mean by that? A broader shift, if not return to the US, is underway. I think what he means is the shift of foreign operations from low tax environments back to the US is happening. It started with Donald Trump, hating on every company, telling them, bring back your money, bring back your operations to the US. And a lot of people kept their money in low tax jurisdictions in Europe because they did not want to bring that cash back into the US, because then they would have to charge for something to those European entities, right? Imagine like you have Microsoft US and Microsoft Ireland, and then you start Microsoft US has to charge Microsoft Ireland something like management fee or revenues or something to bring that cash from Ireland to the States. And when they do that, then the Microsoft entity in the US has revenues and then it's taxed on it. So a lot of them didn't want to do that. It's just tax planning, So the fact that the US has recently entered into a minimum corporate tax agreement with every big nation, including the holdout entity, Ireland, now they have a 15% deal. Now it might not mean a lot. Now people might be like, okay, well, screw this place. I'm just going to bring the money back to the US because I'm going to get taxed 15% anyways. So something to look at, something to think about. So I'm wondering if he's referring to that. The proportion of our revenues generated in the US has increased substantially as compared to our total revenue worldwide. In Q1 2019, for example, 55 million or 30% of our 146 million came from customers in the US. 3 years later, however, in Q2 2022, the proportion of our revenues generated in the US rose to 61%, with 290 million of our 473 million in revenue for the quarter coming from US commercial customers and defense and intelligence agencies, as well as other government organizations. We anticipate that the proportion of our revenue coming from customers based in the US will continue to rise even as our growth in Europe and other international markets accelerate. Okay, so he is saying that the European and international market growth is going to accelerate, but there is going to be growth, important growth in the US, which is good because US don't play. All the headquarters, all the big money is in the US. It's not really in Europe. All the innovations happening in the US. So it's good to see that. Part 2. We believe that our most significant growth is still yet to come. The development of the modern versions of our principal software platform require an extended period of often intensive iteration with an early group of customers in both the commercial and government sectors in order to determine how to best address their needs. We have only recently begun to capture the value of those more refined and productized software platforms, a process that we believe we will continue to accelerate. So they're saying they're developing products, like specific products, commercialization, commercialability, commercializable products. That's the word I'm looking for. Commercializable products. The revenue generated by our newest customers, for example, was nearly equivalent to the entire amount of revenue generated from customers acquired in prior periods combined as a 12-month period that ended on June 30th. Okay. So total revenue generated by newest customers. So the black is new customers, kind of small, but I can't really get deeper than that. And they're showing like, oh my God, it's half-half. It's like almost the same. Okay, great. In the 12-month period that ended on June 30th, 2020, we generated a total of 901 million in revenue, 105 million of which came from our newest customers that we acquired on or after January 1st, and 796 which came from previous customers. The analysis presented here, which focuses on cumulative growth of our new business in recent years, and therefore accounts for continued adoption of new customers over time. Oh my God, 32 minutes, God damn it. Oh no, the timer, I turned off timer. Give me 1 second, guys. Give me 1 second, okay? Resume, okay. A year later in the 12-month period, the analysis presented here, which focuses on cumulative growth, relies on trailing 12-month period, whatever. A year later, that is oh God, okay, yeah, new customers are becoming important. In the 12-month trailing period that ended June 30th, the newest group of customers generated 802 million in revenue, constituting 46% of our total revenue generated in that period. After years of investment, a new high-growth software business has emerged. It's good. It's very promising. Chapter 3. The trend is even more pronounced when assessing the recent growth of the adoption of our software by commercial customers in the US. Our commercial business in the US generated 297 million in revenue in the 12 months that ended on June 30th, 2022. Of that 297 million, 268 or 90% came from our newest customers. The remainder of 29 was from early customers. Wow. Wow, okay. So that means, you know, old customers decided to F off, and the new customers are the ones that are really driving growth. So these are two good things. I mean, one bad is old customers are not sticking around, which I thought they were supposed to be sticky. So if they're doing ad hoc projects and it's just a one-time thing, then maybe the customers are rolling off. Because I remember back in the day, they used to talk about like Home Depot rolling off because they didn't need security services anymore. But now new customers are coming in for 268. It just makes you wonder, like, are they going to stick around or are they going to roll off? Like, how sticky are they? Because that's what I'm kind of getting worried about right now. Because now there's more and more pressure on sales team to hit their sales targets. If old customers are not sticking around and they're falling off, then the new customers have to be just as good or higher to maintain the revenue momentum, right? A related development is that we are seeing former customers, including some of the world's largest transportation, banking, and retail enterprise, return to our platforms in increasing numbers after periods of experimentation on with other data integration and analytical platforms and approaches. So that's good. So people did leave for cheaper solutions. These customers are returning because they have tried other options and those options have failed. These customers are returning because they have tried other options and those options have failed. Failed. Okay. I mean, that's what they're telling me. I don't know if it's true or not, but TBD, okay? Let's just assume that they're being honest. The product has brought them back. Product has brought them back. All right. The vast majority of enterprise software platforms that are currently available to large commercial enterprises and government agencies offer little, if any, return on investment. The billions of dollars spent by organizations on data integrations have yielded less than transformative results. Okay. That's good posturing. Chapter 4. Our software products and platforms are at the center of so much in the world, including the distribution of vaccines to millions and an ongoing war in Eastern Europe. Apollo has developed into a standalone offering that will become essential to commercial and government markets. We believe that the demand from large enterprises for a software delivery and maintenance solution that is platform agnostic will be as significant as the demand for the underlying data integration and analytical capabilities themselves. While our focus is in the short term remains on making our principal software platforms available to increasingly broad segments of the market, we are working aggressively to identify additional component parts and products embedded with those platforms that have potential as commercial offerings on their own. Our platform consists of more than 700 component parts and 65 separate applications, such as Gaia, our collaborative map application for military partners, and Scenarios, our module for simulating varying operating conditions across business and large organizations. Each one of those components parts has the potential to become a dominant and standalone product in its own right. I'll believe you when I see it, man, because you guys have been talking about its own product for a long time. Just fucking do it and bring in the money, man. That's all I need. I need to see the money, okay? Because this shit is not gonna cut it, man. Down 13%, it's not gonna cut it. Okay, you're already cutting forecasts. You said 30% like last quarter, and now you're saying 23%, and now you're giving this letter saying we the best. But like, I need to see it, man. Like that's my issue, okay? Each one of those component parts has the potential to become a dominant standalone software product in its own right. Done. Chapter 5. Calm down. We are building an enterprise software incumbent whose depth and reach will continue to emerge over time. And we remain focused on the long term. Cash and cash equivalents. 2.4 billion in the bank, baby. As of the end of last quarter, we had 2.4 billion in the bank and no debt. 2.4 billion in the bank, baby, and no debt. Damn. Macro report on fire. The combination of which will continue to secure our ability to develop highly differentiated software platforms, notwithstanding the vicissitudes of the broader market and shifting macroeconomics conditions. Vicissitudes, I don't know what that means, so let's find out. Vicissitudes means a change of circumstance or fortune, typically one that are unwelcome. Okay, so they have 2.4 billion, the combination of which will allow them to secure ability to develop highly differentiated products, notwithstanding, so like whatever, even if anything bad happens in the broader market and shifting macroeconomic conditions, Palantir is Gucci. They got the money, fam. They got the money. They got no debt. They got money for days. They can do whatever the hell they want, is what they're saying, okay? In a nutshell. Our balance sheet is now also bolstered by the fact that our business generates hundreds of millions of dollars a year in additional cash on an adjusted basis. After more than a decade of investment, we generated 424 million in free cash flow on an adjusted basis. That's good. We repeatedly decided to raise and preserve capital when others were spending. Our strategy in this regard has secured the ability to continue refining and developing our software platforms in order to maximize their value to our customers over the long term. Chapter 6. We are working towards a future where all large institutions in the United States and its allies abroad are running significant segments of their operation, if not their operations as a whole, on Palantir. Most other companies are targeting small segments of the market. We see and intend to capture the whole. Sincerely, Alexander C. Karp. All right. So that's that, boys and girls. So the actual earnings are not out yet. So I'm going to go through the details later. They still have time to put it out, but they did come up with their update, their earnings release. The bad news is that they're forecasting a base case of 1.9 billion instead of 2 billion, which is what people were expecting when they keep reiterating the 30% growth. But mind you, all they have to do is land a big US deal over the next 6 months, and suddenly they're back in it. And that's what we saw. We saw that they were able to land a $100 million deal over 2 years, which means $50 million a year or $25 million every 6 months. So it's very possible. All they have to do is land, it sounds easy to say, but all they have to land is like a $200 million, $300 million, $400 million deal over 2-3 years. And, they're back at it. They're getting close to their target. And that's why they left that little caveat, excluding US based government deals, because that can change the game overnight. So how do I feel about Palantir Technologies today? Am I worried? I am nervous. Yes, their cash flow is good, $2.4 billion. They're adding to their cash flow, which is great. But the fact that they called down their forecast 6 months in is kind of scary. The fact that their cash flow last year for a full 12 months was $331 million, and now for 6 months, they're at $97 million from operations, is kind of scary. But the offsetting items here that make me feel comfortable is that the headcount that they had, that headcount, I'm talking about these guys. Let me pull that up again. Let me make this small. These guys, 25, they had 125 headcount as of December 31st, and they've been actively adding more. Those guys are contributing, guys and girls are contributing to important growth in the customer count, right? Like we saw that in the report. Like they literally went from, I think it was 79 commercial customers last year, June 30th, 2021, to 203. That's huge. They went from US commercial customers 34 last year to 119. They 3x'd it. They 3x'd commercial customer growth. That is very important. Total customer growth. Where is it? Let me find it. They went from 169 last year to 304. Almost doubled. So it's huge. So I 100% lied to you when I said I'm going to do this in 10 minutes because I resetted the clock like 4 times. But I think it was a good comprehensive video. If you're a Palantir investor, if you're a Palantir bag holder, if you're sitting on the sidelines, this is what you need to know. That forecast adjustment to call down 23% year-over-year growth had an important impact. In my model, I said they're going to grow 34% over the next 10 years. And that said the share value was $19. The fair value was $19. But when I brought that down to 23% over the next 10 years, suddenly the share value was $10 today. So that's why the share is down. Like people are selling off because they're fearful of that. So now it's really important that Palantir pulls out and kills their Q4, because if they don't, and if they do even worse, then the stock is going to get pummeled, beaten down. It's going to get destroyed. And that's very important that people know that. I'm not trying to lie to you. I'm not trying to hoodwink you. I'm not trying to tell you any bullshit. This is the truth. Numbers matter. Valuation matters. And it's important that they control their operating costs. I don't know why their operating costs are higher this time. I would have to say it's probably because of the cost of wages going up, the cost of salaries going up, and the increased headcount for sales. But I need to see the details. When the details come out, I'll do it. So for anyone who's investing, I wouldn't say it's time to jump ship or it's time to be afraid. I would say it's time to be mindful, and it's time to watch carefully what is happening. Follow the deals that they're releasing. Are they releasing new government deals? Any new US government deals that they announce is going to be very good to the revenues and help them get back to that 30%, the 2 billion target. They need to finish the year 2 billion or more. They're saying 1.9 billion. And they even went more precise to say 1.9 to 1.902 billion. So they're being super precise, and they don't think they'll get close to 2 billion. They don't see a path to 100 million yet to get back to the 2 billion target. I think any major US deals announced in the next 6 months could help them get there. But right now, the US is primarily focused on releasing money for the green incentives across the US, which is important to fight the climate crisis. And maybe some of those deals would go back into helping Palantir help companies find where they could be more efficient, where they could be where they can control better their emissions. And I'm thinking like heavy industries like oil, gas, natural gas, all that good stuff, and farming even. But let's see where this goes. I'm not worried, but at the same time, I am cautious. So that's all I have to say. Everybody, thanks for listening to Chat with Jat. Today's focus was Palantir. To all those who invest in Palantir, hang on, stay tuned, and let's stay in touch. Leave me your comments if you have any questions. I'll do another video. I'll read out your comments, and I'll comment, and I'll we can do the little back and forth. Maybe it might be live. I'll see. So let's stay in touch. I'll see you on the other side. Peace.